Welcome to the latest Motley Fool scoreboard. I'm on in Chockavaloon. We've got longtime fools Anthony Schiavone and Matt Argersinger giving a 1 to 10 rating to a specialty chemicals company that helps you waterproof. We'll see if it's bulletproof. It's RPM International, ticker symbol RPM. Kind of a non-boring name. As always, we'll rate RPM's business, its management, and its financials. We'll talk valuation. And if there's time, fools, we'll play Armchair CEO, and we will top it all in about 12 minutes or less. So let's get to it. Matt, tell us more about RPM's business, including industry competition. Scale of 1 to 10. 10 is invincible. 1 is hopeless.
Well, I always think of when I think of RPM International, I think it's like some racing company. But
yes,
it's anything beyond. It's anything but that. On it, I'm giving RPM an 8 out of 10. This is a business that's a company that's in the business of repair, maintenance, protection, really exciting things like concrete additives, waterproofing, sealants, adhesives, coatings, roofing materials. It's got some fairly well-known brands if you're a do-it-yourself, like home remodeler, like Rust-Oleum, Quick Seal, Dynaflex, Plastic Wood. Totally boring, but these products are essential for both consumers and professionals in home construction, construction maintenance, manufacturing, infrastructure. And the thing is, with RPM's manufacturing and distribution network that spans dozens of countries around the world, it can make and deliver these really boring products cheaper than anyone else. So you can think of RPM as kind of the low-cost producer of very essential products, and it makes excellent margins selling these products. And I like the fact that most of its sales are for repair and maintenance. So that means a lot of the business is insulated from, the economic cycle, new construction trends. I think the only reason I have it as an 8 rather than a 9 or 10 is it is operating in a world of highly commoditized products. Someone perusing the shelves at the Home Depot isn't distinguishing RPM's brands from anyone else's. They're probably just looking for the cheapest product to get the job done. So it is a bit of a commodity business, but a very well-run commodity business.
Yeah, I'm going to go with a 7, so slightly lower than Matt's score. I like that this business has a lot of tailwinds behind it, which you wouldn't necessarily think for like a boring business that sells caulk, but it really does. So since 2020, we've had more than $5 trillion in government stimulus that's been issued, and many of those dollars are earmarked for infrastructure and reshoring projects. So that's one major trend. You also have the fact that the median home in the U.S. is now more than 40 years old. So that's going to lead to a lot of repair and maintenance activity. I'm sure if you ever brought up the Zillow app and looked at all the homes on there, like a lot of homes need to be repaired. And I think that really helps RPM's case. And then some additional tailwinds are, more stringent home efficiency standards. You have electric vehicle investments, the growth in data center investments even. So RPM's products are used in all of that. So I'd expect that to be a big tailwind moving forward. And I only give it a 7 for the same reason that Matt gave it an 8, is because of the somewhat commoditized product that they sell.
All right, we're going to go off script really quickly and name our top 10 concrete additives. Go. No, just kidding. We're going to talk management. Scale of 1 to 10, Matt. 10 is Warren Buffett. 1 is Homer Simpson.
I'm dishing out a 9 here on it. This is a family-run business, and Chairman and CEO Frank Sullivan is the grandson of the founder. His father was also the CEO for many years. So this is a company, that's still essentially founder family-led. Frank himself joined the company in 1987. I like the fact that he worked in various capacities of the business and worked himself up. He became CEO in 2002. And since he became CEO, RPM stock is up more than 1,700% on a total return basis. That absolutely crushes the S&P 500. I think my only gripe here, and it's a small one, is that I wish he owned more stock. He owns just 0.8% of the company's outstanding shares. That value is around 140 million. It's way more than his annual compensation, obviously. But I would figure, given his tenure and the family history, that he'd own a greater percentage.
Yeah, I'm going to go with an 8 for, again, a lot of the same reasons that Matt just mentioned. I like the way, if you look at the proxy statement, I like the way that management is compensated for the most part. So their performance is based on performance metrics or their compensation is based on performance metrics like revenue growth, profitability metrics, and then as well as balance sheet efficiency metrics. So I like that. And Matt, you mentioned Frank Sullivan's track record since becoming CEO in 2002. I think that's awesome. It's on an annualized basis, it's roughly 14% since he took over. So that's very strong for this type of business. And I'm just going to dock a couple points because of the low insider ownership. You mentioned the family run business. He's been with the company since the 80s. I would have expected him to own a little bit more of the company than he currently does.
I mean, what was it, like 140 million? I mean, that's where the absolute number differs from that percentage where it's like, wait, less than 1% family-owned business? All right. Well, let's move on to financials, Matt. A 10 is a fortress, a 1 is yikes.
I'm going pretty high here on it. I'm going with an 8. I mean, that's because for a commodity business, RPM generates incredible margins. I mean, we're talking operating income margins of between 10 and 12%. Folks, that's better than Tesla's margins. It has a free cash flow yield of almost 5% based on today's market cap. And what I love is that a few years ago, RPM's management instituted this new strategy called MAP 2025, which is designed to increase the company's gross margins by as much as 570 basis points and get its EBIT or operating income margin up to 16%. If they're successful, and we'll know in a couple of years, they're talking almost $500 million in costs that are going to come out of the business. The free cash flow of RPM's business is going to surge. They're going to be growing operating profits at a double-digit rate. So the business is actually getting more profitable going forward. And I also point out that the company has increased its dividend for 51 consecutive years. That makes it a dividend king. It just announced a 10.9% increase to the dividend. And the dividend, if you just look at the last 10 years, the dividend is almost doubled. So business that's getting more profitable, a steady growing dividend. And I think, as Ant and I will often say, that is kind of the ultimate sign of a company's financial strength and growth.
Yeah, I'll go with an 8. Matt mentioned a little about the dividend and some other capital allocation things that I like is one, that they've been repaying debt for the last few years. Their net debt is actually the lowest it's been since 2019. And then as well as share repurchases. It's not necessarily a high priority for the management team, but they have been repurchasing a decent amount of shares in recent years. And then a little bit more specifically on their dividend growth has been accelerating, which is something that I know Matt and I love to see. In 2022, they increased their dividend 5%. 2023, they increased it 10%. And this past October, they increased it 10.9%. So I think that combination of lower debt, lower share count, but accelerating dividend growth, I think that's a pretty strong indication that this business is generating a lot of cash and doing well. So I'll go with an 8.
Every data point's more exciting than the last, actually. And let's talk valuation now. See if that holds up. How well will RPM stock do over the next 5 years? And how safe is it? Keeping in mind a 10 is a sure thing. 1 is a lottery ticket.
Yeah, so I'm going to go with between 10 and 15% annualized returns with a safety score of 6, though. So I mentioned how Frank Sullivan, since he became CEO, has the company's generated 14% annualized returns. When you look at the company today, it's got a 1.5% dividend yield. It's grown that dividend at a double-digit pace, like I mentioned. So when you also factor in all the tailwinds behind this business that we mentioned earlier, I think double-digit annualized returns over the next 5 years is reasonable. I only give it a safety score of 6 because the stock does trade at a healthy, roughly 23 times forward earnings. So I think that creates some risk. Even if the business itself performs well, there's the opportunity the stock might not perform as well just because of that premium valuation. And, at the end of the day, this is a bit of an acquisitive company, and they've had success with acquisitions in the past, but there's always the risk that management does make a poor acquisition in the future. So I think we have to account for that.
I'm also in the 10 to 15% range. I'm going a little higher on confidence, so I'm going with an 8. Yeah, the stock's trading at an all-time high. Valuation isn't cheap, as Ant pointed out. But I think even if management falls short of those MAP 2025 goals that we talked about, earnings per share will still probably grow in the double digits. So will likely the dividend. So I think as long as the valuation kind of holds steady from here, I'm confident that the stock can deliver a double-digit total return.
Management was rated 8s and 9s, so we'll skip the hubris of armchair CEO and go straight to top it. Anthony, is there a company in RPM space that you like more?
I don't think directly in RPM space, but I will say I really like the Home Depot, which kind of plays in that same space. Being one of the largest home improvement retailers, just been a tremendous performer over time. Also has a great dividend growth history, great capital allocation history. So I don't know if I would say top it, but I do like the Home Depot as well.
I think that's a great call. I can't top RPM. I think for what they do and the space they're in, They're the leading market. They have leading market share. They're executing so well. They generate great margins. I do like Ant's call there with Home Depot because ultimately that's one of RPM's biggest sales channels. And oftentimes it's better to control the channel than to be the company that's trying to feed that channel like RPM is. So great call there.
Thanks to both Matt and to Ant. They've given RPM International a strong overall score of 7.7 out of 10. Sure, that 8.0 that would force me to own shares. But I'm definitely intrigued now. And there is nothing boring about a multi-bagger that also pays a dividend. That is beautiful music. So I'm definitely adding it to my watch list.
Yeah, I was hoping we tip over the 8 there on it. But anyway,
I know. It's close. But maybe I'll have to do it on my own. You can lead this horse to water. I'm going to have to take the drink. But look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is FedEx. Till then, Fool on.
Yeah, Home Depot's former CFO is actually the CEO of UPS now, which is kind of interesting.